Good morning. It's Jeffrey Christian of CPM Group. It's about 10:50 on Friday morning, the 28th of June here in New York. I have a lot of things I want to cover today, so I'm going to try to be brief. It's been a lot happening, except in the gold and silver markets. First, I guess I should talk about the debate and politics. And our take is that everyone lost last night. That debate was a disaster. Biden showed himself to be feeble. The Democrats confirmed what I've always said about them. They're less of a political party and more like a lot of motorheads gathering on a suburban strip mall to check out the tricked out motors. They are totally unprepared. Anybody who was surprised that Biden would be so feeble, I don't know where they've been the last 8 months or so. Trump didn't win exactly. He did a lot better than Biden, but I don't think he said a single thing that was true. He proved that Biden, dealing with all of his facts and data, is totally disinteresting to American voters. And somebody with a Cheshire grin smile saying whatever he wanted, that he's the greatest, that everything he did was the greatest, that everybody loves him, is a much more acceptable to at least some portion of the electorate. I think that it's actually a smaller portion of the electorate than a lot of people think, but we'll find out. The bottom line is the next 4 months are going to be extremely important and difficult and hard to watch and hard to live in terms of U.S. politics going up into the election and probably after the election. And that's probably good for gold and silver because it's probably going to scare and stimulate a lot of investors to buy more gold and silver because of the pathetic state of American politics. Anyway, that's all I need to say. We lost that debate as a country. We lost that debate as a world. It demonstrated major problems politically, which we've been talking about ad nauseum. The next thing I wanted to talk about was the markets and specifically the June Comex silver contract. Gold has continued to trade in a range of 2,300 to 2,400. Actually, it got up to about 2,400 at the beginning of June. It tried to stage a couple rallies through the course of the rest of June, and they fizzled out. It's trading around $2,335 as we speak right now. Our expectation has been that it could see some weakness. It could fall below 2,300 in the period of July and August, maybe not too far below 2,300. We see this as a consolidation period that will give way to higher prices in September and October and November and December, partly because of the U.S. election. Given the pathos that we saw in the debate last night, maybe the gold price doesn't fall below 2,300 and maybe it starts rising even sooner than we had been thinking because investors around the world really saw a lot of reasons to say, I need to diversify my wealth last night. But I want to focus more on silver. Silver prices actually have shown greater weakness than gold prices over the course of June and have moved down. They're basically below $30, and they've been below $30 for most of the second half of June. We talked last week in a video about the possibility that the silver price could spike up this week into today, the 28th of June, given the fact that there was a large volume of open interest in the July Comex silver futures contract, which becomes deliverable today. We pointed out that this often doesn't push the price up, but it sometimes does. We pointed to an example in April of 2011 when silver prices actually rose to their historical record intraday high, basically because of the May Comex silver futures roll. We've talked about other times when that's happened. We thought it might happen this year in the July roll, but it didn't. And that's actually a sign of warning. If you go back to May 28th, a month ago, you had 733 million ounces of open interest in the July contract. 670 million ounces of that has been rolled into the September contract in the past month. And the silver price has fallen. It did not rise. Whoever was doing this, a little bit more is known, or can be assumed. Someone is taking a big delivery or making one. Someone is making a big delivery. You can see the data here. Total registered silver inventory, 73.8 million ounces as of yesterday. Eligible, 223 million ounces. Total, 296. Total is about the same, but we've seen about a 10 million ounce shift out of eligible into registered. That tells you that somebody, a dealer or a bullion bank, has been told by its customer or customers that it plans to take delivery of a lot of metal through the July contract, right? We still have the second chart here, the second table here, 12,680 contracts in the July contract. That's 63 million ounces of silver open interest. Still could push the silver price up over the course of early July. We have to wait and see. There still is some there. But you've seen 90% of the open interest bought back in the course of June, and it didn't push the silver price up. The silver price declined during that period of time. That tells you there's an enormous amount of liquidity. And also, we're now seeing with the transfer of 10 million ounces from eligible to the registered, that tells you that some bullion bank or trading company was informed by its customer, probably a fabricator, perhaps an institutional investor, that it was planning to take delivery of at least 10 million ounces through the July contract. The metal's there. It's readily available. It probably won't have a price effect. And the fact that it won't have a price effect should be a note of caution for anybody who thinks that the silver market is running out of silver and that the price is about to skyrocket. Now, there are a lot of crazy, unsubstantiated rumors. They're not really rumors. They're hypotheses that people, just come up with in their head about this stuff being taken off of Comex to be shipped to China. There's no basis for believing any of that. We have to wait and see who it is that's taking delivery. It will never be announced, but that 10 million ounces will show up at some point in some part of the market. Maybe in a new institutional investor's silver indexed product, maybe in an ETF, maybe in fabricated demand, which will be harder to find, but we'll sense it if it's there. It's important to know that that stuff's out there. Now, as I said, a lot has happened in the last week, just not in the gold and silver markets. GDP came out, the third estimate for first quarter real GDP was released by the Bureau of Economic Analysis on yesterday, and it was 1.4, which was basically a 1.4% expansion in the U.S. economy in the first quarter of this year. And that was in line with the second estimate released earlier. And you can see here, it's in line with a lot of the growth that we've seen since we came out of the lockdown in the middle of 2020. So GDP continues to plug away. And if you disaggregate it, it's pretty interesting. These are the sectors of the U.S. economy that expanded and that didn't do well. And you can just see visually, you can grab it and say, okay, more parts of the U.S. economy were expanding. The pale blue are government expenditures. The dark blue are private goods, and the orange is private services. And the big growth was in retail trade. People were buying stuff strongly in the first quarter. Also, construction was very strong. Finance, insurance, healthcare, they were all doing well. Government spending, interestingly, at the state and local level. Federal spending, the lower, the smaller blue line, lower, was actually far less dynamic in its expansion than state and local spending. Very important to understand. Real estate, rentals, and leases also showed strength, as did a number of other categories and segments of the U.S. economy that I will not bore you with. On the weakness side, it was durable goods and non-durable goods manufacturing. People were buying the stuff. Companies were buying the stuff, but manufacturing slumped in the first quarter. So that's the state of the U.S. economy in the first quarter. We're now at the end of the second quarter. Probably, from what we can see, maybe a little bit more weakness, but continued strength in certain segments of the economy. Today, the personal consumption expenditures were released, and the personal consumption expenditures price index. The latter is important because the Fed thinks that that is a more representative price index on inflation in the United States. So the Fed pays more attention to the PCE. And if the Fed pays more attention to the PCE, the markets pay more attention to the PCE. But I think you need to look at the personal consumption expenditures too, because they're actually very important. Personal consumption expenditures in May on a month-over-month basis rose 0.5%. That was in line with recent months, and it's a healthy, non-inflationary pace for expanding expenditures. Disposable income also rose 0.5% in May. Now, obviously, there is a terrible distribution there, with a lot of that disposable income going to wealthy people and not to 95% or more of the population. But you're still seeing signs of economic expansion in May through the personal consumption expenditures. Looking at the price index, it was flat, 0, month to month. Excluding food and energy, it rose 0.1%. The deceleration in inflation, as measured by the PCE, continues. And it continues to be a little bit better than the deceleration you're seeing in the consumer price index, which is what a lot of other people use as their main measure of inflationary pressures in the United States. If you look at the May price index on a year-over-year basis, it was up 2.6%, which was in line with the increases in prices since January. And it was up 2.6% excluding food and energy. So you are seeing a deceleration of inflation, and you are seeing a continued expenditures to personal consumption, which was that retail thing that showed up in the GDP figures. Also this week, the Federal Reserve Board released its annual stress test from major banks. They have, after the Great Recession and global financial crisis, created a system whereby they look at the ability, the financial balances and health of major systemically important banks to see if they have in place the wherewithal to survive future financial crises. They looked at 31 banks, and they found that the capital sufficiency levels were down a little bit from 2023 reported levels, but much higher than previous times and in much better shape than they were in that period, 2006 through 2011. So the major systemically important banks have sufficient capital to survive another major financial crisis in better shape than they were in 2008. They might face larger dollar losses, but as a percentage, it's probably not so bad. And the capital levels would deteriorate, but they would deteriorate probably far less than what the regulators think is a risky decline. So the banks seem to be in better shape. And they also found that the banks could withstand a 40% drop in commercial real estate values, which is important because we have this surfeit of commercial real estate that is hanging over most major cities and a lot of suburbs and other places. So the banking system isn't about to collapse, despite what some gold promoters may tell you. Now, finally, I want to talk about some trolls. There's this group called Our Wall Street Silver. I don't know that much about it. I think they call themselves the real Wall Street Silver. That's sort of like saying, I'm the real rapist. You know, it doesn't make sense to me that you'd want to be associated with a failed marketing scam from 2021. But they do a lot of nasty trolling of me, personally, which is one of the reasons why I don't know that much about them. Who pays attention to that kind of garbage? And then they sent me this email yesterday. They cordially inviting me to participate in a 2-hour discussion online on the evening before the 4th of July on their Twitter space, which I think has like, 13 followers or something like that. And they asking me in particular to talk to them about silver and gold and world trade and world economics and world financial things prior to the creation of the Federal Reserve. Saying, oh, you have a unique perspective, i.e., I know something about it. They're cordially inviting me for this. Well, we'll respond to them later today. And our response will be what we've responded to previous trolls. They've been anything but cordial. In fact, they've been extremely rude and infantile in their rudeness. Really terrible people. Our response will be the same as with Jim Lewis or Chris Marcus or others that have sunk to such prepubescent humor to make fun of me. Jim Lewis asked us to be on the real Wall Street Silver thing in 2021 and then in 2022. I spent 3.5 hours with him in Vancouver in 2022 talking to him about his group, our group, the silver market. It was very enlightening because he said didn't care about silver, didn't want to know about silver, didn't want to offer his viewership good information about silver. He didn't even care about his viewership, and he didn't care if they lost a lot of money listening to the garbage he was spewing out. All he cared about was the number of subscribers because that dictated how much he could charge his sponsors. And that's all he wanted. Hearing that, I said, sure, let's do a interview, a conversation. We recorded it. He gave us the right to review it before it would be released. He never really got to us about showing us what they had done. And then they came back to us and said, Wall Street Silver's looked at this conversation between us and you, Mr. Christian, and we can't see any positive thing that would come out for Wall Street Silver from that interview. In other words, they looked like fools and liars. And that's what they were. And that's what they are. Chris Marcus also was doing some really rude shit. And one of his sponsors said, excuse me, but we've made a lot of money and we've saved a lot of money using CPM Group as our research consultants over the decades. And you should apologize to him, which he did. Jim Lewis also apologized before we did that thing. If real Wall Street Silver or any other prepubescent purveyors of gold and silver information want to talk to us, they should do a full apology that's acceptable to CPM Group in public and promise to stop their two-bit trolling. And then we can talk about whether we will talk to them in public. They seem to want me to educate them about things that they don't know about, pre-1913 monetary systems. That's the kind of consulting CPM Group charges people for. And we would charge them $2,500 to educate them. Have no interest in having a debate with them. I like to have debates with intelligent, informed people. We, generally speaking, don't have time for groups like that. And my colleagues and business partners asked me to not even mention this publicly. But I wanted to, because I think that the public should know that these trolls have approached us to cordially invite us to help legitimize their existence in the silver market after trolling me horrendously. My mother would have slapped them. Their mothers would have slapped them. We don't have time for people like that. We always make time for retail investors who want to understand what's really happening. You look at the world, you look at the financial markets, you look at the banking system, you look at the gold and silver markets, and you say, what's really going on here? And you try to find somebody who can inform you intelligently what's going on. And you find a lot of people who are hyping stuff. They're waving their arms saying that the world's going to collapse, the dollar's going to collapse. Oh, Russia or the BRICS are going to have a gold-backed currency. Central bank digital currencies are going to destroy personal freedom. They just go on and on and on. And the thing about it is they've gone on and on and on for decades. They've been wrong, and they're still saying the same garbage, and people are still believing them. Now, that's a cottage industry we can't destroy. Those people, that's how they make their money, and they will continue to do it because they know, as P.T. Barnum said, there are plenty of people that will believe it. And there is a sector of true believers who will believe this because it fits their worldview that everything that they do wrong that hurts them is somebody else's fault. It's conspiracy. I'm wrong on silver, it's got to be a conspiracy. I lost the election, it's got to be a conspiracy. I'm living in a trailer while that guy's living in a mansion because he went to school and studied while I went to school and huffed glue. It's got to be a conspiracy. We don't have time for those true believers because we will never change their views. But there's a vast majority of investors who look at the world and say, I really would like to know what's going on. I'd like to have a legitimate, sound, reasonable, rational, informed explanation of why somebody would take 10 million ounces of delivery of silver via the July Comex contract. We know, and we tell our clients. And we'll tell Real Wall Street Journal for $2,500. We always have time for real retail investors who want to understand what's really happening. In our open forum yesterday for our clients, I started it with a line from Superstition with Stevie Wonder, the chorus of which is, or the refrain is, if you believe in things you don't understand, then you suffer. Ain't it the truth? So we had our open forum yesterday. We will be releasing our Platinum Group Metals Yearbook on July 16th. Our crew, Rohit Savant, and Carlos Sanchez, and myself. Rohit's working furiously on it. Carlos and I, perhaps less furiously. That'll come out on July 16th. Meantime, you can go and pre-order it at our website, $160. You can buy and download our gold yearbook for the 2024 or our silver yearbook for 2024. Those came out in March and May, respectively. You can buy other research, and you can send us an email at info@cpmgroup.com and say, I would like to become a CPM Group client. You guys can help me understand these markets and make better investment decisions. I'll talk to you next week. In the meantime, take care of yourself. Sorry they're not long, but a lot of things are happening this week. Take care of yourself. Take care of those around you. And get ready for 4 nasty months of politics in America.